Aloha, good morning. This is Caron B Davis of Caron B Realty International, and we're back in the office. I know the last few weeks we've been out on site of our new listings, and we'll be out again next week. We've got some exciting new inventory coming on the market. But today, very excited. We have Joe Schmitz, and he's the Vice President and the Branch Manager for C2 Mortgages. And welcome again, Joe. And Joe's been in the mortgage business since 2006 and just offers a lot of incredible analytical thinking of what's going on in the mortgage business and the interest rates and what the Feds are doing. And I'm so appreciative of that because we really want to keep up with, how that will affect our next move in life, especially with the housing market. So with that, Joe, I will give you the floor and you can give us an update of everything.
Thank you, Caron. You picked a great week to do this. As you know, as many know, the Fed lowered the rates, their federal funds short-term rate 550 bips earlier this week, and I'll kind of get to that. But I wanted to start more of a bird's eye view of things and kind of what rates, this effect that lowering rates really has on the general market. And the biggest thing is, I think, is it's going to start to unlock inventory. And what do I mean by that? I mean that someone that's sitting in a 3 or 4% mortgage, to move out and go get a 7.5% rate, it just really wasn't feasible for a lot of these people. But as rates come down, transitioning to another property becomes just more feasible and more affordable. And then what it does is a greater number of buyers have access to the market, and then buyers that already have access to the market can push their price range up as well.
Certainly. And, with the announcement this week, how did that affect, say, long-term and short-term rates?
Sure. So kind of interesting. A lot of people always think that, the Fed cuts rates and rates are going to come down immediately. But it doesn't really work like that. Though the Fed's funds rate does ultimately drive really the interest rate market. Markets are always forward-looking. So rates have actually been going down for 5 months. So we already had this really priced in. We had rates go slightly higher that day, not a ton higher. But the bond market just didn't really, it just needed a relief a little bit. And it was kind of surprising that the Fed cut 50 bips, for a lot of people. So, but yeah, I mean, the bond market, we saw rates kind of come back down in line to where they ended last week today. But the next day, actually, they were like 1/8% higher. So
No. And what's your prediction, say, going into the new year with interest rates and everything?
Yeah, so right now the Fed's kind of indicated they're looking to cut another 50 bips this year, 100 bips next year, and then 50 bips in 2026. I'm still thinking, we're probably going to be around 5.75, maybe at the lows. I don't think we're going to be much below like 5.5 on a 30-year fix by the end of the year. My original projection was 6%, and that's about where we're at right now.
Yeah.
So yeah. And then just to kind of give an idea, go back to like talking about, how this affects like borrowers is, to give an idea of, how much difference in cost that is. So like 1% difference in a rate on $1 million loan would be $670 roughly a month. So, it does really, affect the cost of borrowing, the cost of purchasing a home.
No, I hear that. And, even when the rates were down, I mean, they weren't a lot less than 5.5, really. I mean, there was a few of absolutely where they were very low, but that was a very short.
Oh yeah. I've got 2.25 on my VA loan. So, and then we had a lot of people that were in, high twos on conventionals, and we were there for a long time. And that was a lot of the problem, I think, was rates were just too low for too long. It's just not healthy when they stay that low for that long. And that's kind of why we've been in this kind of frozen market, so to speak, for a bit, because
what I have heard though is what I'll look forward to actually is the 5 and 7 year ARMs. Those short-term rates have kept up there with the 30-year mortgages, but someone had mentioned the other day that we'll see those actually come down.
Yeah, short-term rates did a little bit better this week. I'll usually watch like 2-year Treasury futures for that, and they did a little bit better than the 10 years, but they've been kind of following along. You know, they were later to catch up with the longer term rates. But yeah, we have seen you know, the ARMs, you know, starting to price a little bit better. And that's typical as, you know, as rates come down, that the front end spread will actually, you know, come down a little bit quicker. So.
Oh, wonderful. Well, anything else, you know, I think for people planning, you know, I mean, do you think refinancing is an option in 2025, 2026? I know some people went ahead with the higher rates and, you know, purchase, but when should they, and I know when they bought, a lot of people thought, well, I'll just refinance when the rates come down.
Yeah, so we this is how we kind of look at that is, you know, when there's, you know, rates have come down enough where you can save, you know, a decent amount of money, either at least a 0.5%. That's we ideally want people coming down 1%, but not paying points, and ideally getting a credit to cover the closing costs. It's just, you know, it's good to just capture that savings when it's available, because we don't really know what the market's going to do. Like for instance, inflation could spike back up, and the Fed could literally put their brakes on. The bond market could sell off, and we could be back at 7.5. You know, I don't think that's going to happen, but that's just realistic. So I think it's important, as you know, as a homeowner, to not be trying to time the market. But I think a way to do it is to hedge yourself by not like diving in with like, I'm going to buy down the rate with, you know, $20,000 in points and everything. What we recommend is ideally we get, you know, 0 points, and we get some kind of a credit for the closing costs from the lender at, you know, maybe not just like the lowest rate, but a rate where you're going to save a significant amount of money. But then you're kind of hedged. Whereas if rates go up, yeah, you won, you did a great job. If they come down, you can always refinance again, and you're not into that loan for a large amount of closing costs. So, you know, they always say, I like the saying, you know, marry your home, date your rate. So, and I think that's really good advice for, you know, for homeowners.
No, well, thank you so much for that. Well, you know, happy Aloha Friday, and thank you for the time this morning. And I
Sure,
hope, you know, and it's just all about knowledge is power. And, you know, people can
sure.
start planning, you know, what they're doing with their homes, if they're thinking of upgrading or downsizing, and what their payments, what they're comfortable with their payments, and what the, you know, market is doing for mortgages.
Yeah, and then speaking about knowledge is power, just, you know, so people that are watching know if they want to follow rates. You know, we update rates hourly on our website,
Oh, great.
c2hawaii.com. We also post on our Facebook and Instagram stories daily what rates are. We have a lot of realtors that follow it, but a lot of borrowers follow it too. So just good, easy place to check rates if you want to.
Oh, thank you for that. Resources are huge. Thank you so much.
Sure.
Now, with Aloha Friday, we're going to go to Marianne's photos. And Marianne, one of our agents here, always has the most beautiful photos. And here she is showing off all the beautiful flowers, of course, and the orchids, beautiful pink orchids. And here she goes to the, let's go to the next one, the red bromelia
Nice.
and the water lilies. And this was a exotic Waimea Valley beauty, she said. And then the plumerias, and that
Oh
always
wow,
puts a
that's
smile. Isn't that beautiful?
yeah.
Yeah. So,
Where were these taken? Where are these flowers at?
well, she takes them. She's amazing. She'll just go, you know, about her day, and her eyes will just, you know,
Mm,
they will capture something, and she decides to take a photo. She just
gotcha.
has a real knack for it. And again, she's on Instagram, Marianne Gaylord. And she puts her photos on there, and it's a real treat for us to share these each Friday. It's a passion, and she does very well at it, of course. But much mahalo, and have a wonderful
Yeah.
weekend,
Aloha.
Joe. We'll catch up with you later. Mahalo. See you later.
Thanks, Ron.